You're in the Business Insurance Zone with me, Steve Savant, national insurance columnist and financial color commentator. This week on The Biz, the Medicare Supplement Insurance Series. And on today's show, Part 5, the medical supplemental insurance market with MedSup expert Sam Corey III.
When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Well, welcome everyone to the Business Insurance Zone. I'm your host, Steve Savant, and we're broadcasting live to a nationwide audience of financial advisors right here in Fountain Hills, Arizona, home of America's largest fountain. And day 5 with us, MedSup expert Sam Corey. Hey, Sam, welcome to the show again.
Thanks for having me.
Well, I am now in interview mode since I am now in my pre-early 60s. I'm trying to learn about all that is MedSup. It sounds intense. How intense? Each state has their own doc. Sorry for my notes. I have a lot. I read this last night and I got to tell you, I was blown away. But I was surprised how in English this manuscript is, and you can order this by going out there. Don't order it from me. I'm not going to every state. Order it from the government. But it's unbelievable. And one of the things that I want to talk about as I'm interviewing Sam, kind of for myself, I'm trying to get myself ready here because I'm going to have to be dealing with this in a couple of years. How much does Part A cover? I mean, when I think about Part A, I'm thinking about my institutions, my hospital, things like that. What does that cover?
Anything that happens in a hospital setting typically is covered under Part A. Your facility charges.
All hospitals take this?
Yes.
Okay.
I say yes.
I'm
sure there's some place that doesn't.
But generally
speaking.
Okay. Now, what about this enrollment penalty? I mean, I heard of this thing, you're late to the game, right? You didn't do this on time. This is not of a good deal, right? I mean, this is somewhat punitive.
It's not the end of the world if you miss it, but it's certainly better if you don't. You pay the penalties, and they last for some years. For however long you had it, you didn't have it, you got it's double that. But it would probably be more of an annoyance than anything else. But it's something that you should pay attention and get everything done on the dates that you need to get it done.
I mean to tell you that this is why we need to do a heads up on this. There are people that don't know this, that are just unnecessarily paying the penalty, paying twice the amount. I mean, that's why we want to introduce some of these concepts that are some of the things that we deal with just as regular agents and representatives. And remember, the senior market, people who come to the table and save seniors money, especially in issues like this, are going to be able to do other things in their practice and in their business. So I just want to exhort you to go that way.
And here it's really not even saving the money initially. It's just making sure they're doing the right thing.
Well, when I think about these coverage choices, I mean, at first, I have to say, I'm better now that we're at Friday, right? But when I first read this, I'm looking at plan A, B, C, D, no E, F, G. I mean, I'm just like, who can keep this straight, right? But what are my Medicare coverage choices? When I have selections here, I have choices to make.
You do. So once you've gotten Medicare Parts A and B, you're in the Medicare system. Then if you decide to get a MedSup, you have a choice of 4 or 5 plans you can choose from that make sense. Or you can go Medicare Advantage, which is a private insurance company taking care of your medical liability, or you can do nothing, and then you have a prescription drug component that you may or may not want to participate in.
It's all about math, how much does it cost, and really doing your due diligence on this before you turn 65. This is one of the things I think you could actually do educational seminars and workshops for seniors that would really be of value to them before they're 65. So I would start to talk about this the moment, I would say maybe even at 59 and a half, just because qualified plan, everybody's talking about it then. We might as well just start making the natural. We're going to be talking about Social Security. We're going to be talking about MedSup. We're going to be talking about when I'm going to be taking my Social Security, when I'm going to be taking my qualified plan. All this is the perfect time to start talking about these issues.
And all those issues have so many nuances. It's very important to understand what your options are.
Okay, now here is the one that's, if it's going to be controversial, here it is. I got my MedSup plan. I got it at 65. I'm paying no penalty. Great. But all of a sudden, I'm not really sure about the carrier anymore. Maybe their ratings went down. Maybe I heard another carrier came on the scene and it's a lot cheaper. What about considerations? I have seniors that are already in the plan. They're watching this show. Should they consider changing or no? And if they do want to change, why should they?
If they're healthy enough and there's a quality carrier who offers a good value proposition, certainly changing makes all the sense in the world. I mean, you don't pay too much for your car insurance if there's a better alternative. Now, if you're nicked up, you're medically unable to qualify through underwriting, it's going to be, you're going to be spinning your wheels. Now, you can go look at a Medicare Advantage if the premium becomes prohibitive, where it's affecting your lifestyle. You can't visit your kids or pay your heat bill, your air conditioning, and Medicare Advantage saves you some money. Sure, let's look at some other alternatives. Changing it, you have to go through underwriting, so you have to be in okay health. I mean, you don't have to be a marathoner, but certainly none of the biggies, the big problems are going to probably knock you out.
Well, I think that's one of the things that we want to be sure that also seniors know about is, listen, just because somebody's telling you you should change, I don't know if you should change necessarily. You may have a really good product, and you got to be careful because there's some aggressive agents out there trying to make compensation. We all have to get paid, but we need a third party sometimes, somebody to sit down and say, no, you should hold what you have, or no, you should consider.
And we do these analysis all the time for agents and for their clients. And what we see is a lot of times a carrier will come into a marketplace with maybe an attractive, not a loss leader, but an attractive price that may be priced aggressively. And then they'll have a rate increase that's maybe a little bit higher than what the trend would be. But when you do the math, they're still saving money. Yes, no one likes to see a big rate increase, but if you shop it against the open market, they're still paying under what the market is. So you need to look at the full picture of what's available out there.
Well, when I'm looking at trying to make decisions like, should I keep what I have or sell what I have, we have some charts and stuff. I mean, we have some stuff that's supporting material that you can do some comparisons to, and then just look at it. I love spreadsheeting. I'm kind of addicted to grids, and I want to be able to compare which one works the best. So before you say I'm replacing mine, let's make sure that you feel comfortable. Are you getting a really good deal? When we come back from the break, I'm going to continue I'm pretending I'm a senior, ready to make this happen for our Medicare supplemental insurance. And don't forget to enroll at IULUniversity.com for the best training, education, and sales support when it comes to life insurance for retirement income.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Did you know the average 401k runs out of money just 7 to 8 years into retirement? Time Magazine, the Wall Street Journal, and many other publications have warned of the difficulty of saving with a 401k. But what if there was a way to create tax-free lifetime retirement income with no stock market risk? Good news, there is.
Living in fear of the next market dive is not the way I want to live my life.
Why would I go out there and take on risk when I don't need to?
I have a lot less stress knowing I can't lose any more of my retirement savings in the stock market.
Call now to receive your free, no-obligation analysis of what this retirement vehicle could do for you, a comparison to your current retirement plan, and a free video that explains this exciting opportunity. Start planning a retirement you can enjoy instead of worrying about future tax increases and stock market losses. Creating income that will last your entire life is the most important thing you'll ever do. Take control of your future. Call now for your free analysis, comparison, and video.
Well, welcome back to the Business Insurance Zone. I'm Steve Savant with Sam Corey. And remember, you can order today's giveaways at thebiz@brokersalliance.com. And what we're giving away is our Medigap summary, which is our MedSup summary. It itemizes the MedSup issues important to not only seniors, but really how this can work for your practice. And I still say this could be an entree into the senior market. We've been talking about this. And remember, before you move forward with anything we're talking about, I want you to look at this PowerPoint presentation that I want you to actually ask me for. Just write me at thebiz@brokersalliance.com, and I'll send that to you too, because it kind of lays out how this works in your practice, and it could be really helpful to expand into a market like this. And remember, always consult your tax advisor before you start talking about what is and what isn't taxes. And remember, some of this is mean tested, so you're going to have to know a little bit of 1040 here, right? I mean, you're going to have to know that. But don't go forward with giving tax advice until you always consult your tax advisor first. And if you're FINRA licensed, always consult your broker-dealer compliance officer before going forward. Now, we're continuing our discussion with Sam. Sam's been around for 15 years in this market. He knows it cold. This is what they do. This is their forte. They are a huge adjunct to our sponsor, Brokers Alliance. And I just want you to know that what we're looking at is different ways to help seniors. And this is a huge, huge arena. Now, when I'm looking at this, I'm thinking Steve's out, I'm only a couple years out, so I'm trying to get my information free. And here's what I want to know about this, because this is also another question that you get all the time. It sounds like when I hear a question like this, it presupposes that I didn't do this when I should have. So it says, can I add drug coverage Part D to my original Medicare? Now, I know the answer is yes, but my bigger question is, well, why wouldn't you have done that at the front end?
For example, my mother just turned 65, was taking no medications at all, antibiotic if she got sick. And she's like, why do I need a drug plan? I'm like, well, in case something happens that you need drug coverage, and you're going to pay a penalty if you don't get it. So we put her on the lowest cost plan that we could come up with, which did everything that she needed it to do as far as her prescription drugs, got her the discounts, and it gave her the credible coverage so that she wasn't going to have to pay the penalty. Now, if her health changes during the year, the next enrollment period, which is in the fall, she can get a different drug plan. It may have more robust benefits to it.
Now, so you can go back. Is there a penalty for adding it though?
Yeah, there's a penalty for every year that you don't. It's actually every month that you don't have it. There's a penalty that's added on.
Okay, well that begs the question: why would I not put D on when I'm enrolling? Why would I not do this?
People do it. I don't know why, but I would recommend that everyone get Part D when they can.
When you're talking about adding D, is it really that big a monthly cost upgrade?
Plans go from and I don't know all the states by heart, but $15, $17. Mid-range plans are going to be $30 to $40, and then at the high end, there's some that are over $100.
Well, I'm just trying to make sure I do everybody wants to do this right, because there's some bugaboos built into this that can cost you some money here. So I'd really have to hear a reason, I didn't hear it yet, why I would not get Part D with this,
I can't think of a sound reason why not to get Part D. I mean, the people have their own things in their own minds where they think, oh, well, I don't need it, but as someone who's involved in this, you just never know when you're going to need it, and it's and you can't get it mid-year. You have to wait till the end of to the
anniversary. Now, is that the anniversary of the plan or a scheduled anniversary?
There's an annual enrollment period every year that happens in the fall.
And when is that?
That just ended on December 7th and started on October 15th.
So your choice is you got a window here every year. Going to change plans, going to add things, whatever.
Right.
That choice. We should really, we should really know what plans we're choosing. Especially, we talked on that show 3 days ago. We're doing, are you going to take plan A, B, C, D, no E, F? That's a lot. I need to know that up front, right? So do we have easy to understand spreadsheets that push? I have some of this that I'm giving out now, but really overall, prices per state that lays this out.
We have access, and we provide to the people we work with spreadsheets on the MedSup side. They're available on the Med Advantage side. It's a little harder the Med Advantage thing gets a little harder to sort of decipher because you've got a lot of different moving parts in there, sort of like comparing individual health plans. It gets confusing. But there's usually only a handful of plans that are going to be in any one market that are going to be what I consider any good. So we can guide people through that process.
Well, I'm looking at some of the ideas about, what else should I really be considering? Because we've considered what I call the big talking points. What are some of the little side things that you just want to make say, hey, just keep people aware of, because we didn't really talk about it all week, but we really want to address it. It's not a main issue, but it could be an issue.
One of the big gotchas, or could be an issue, is if you decided that you wanted to go to Medicare Advantage and you get ill, you get sick, and you want to go see someone at Mayo Clinic, or you want to go to Columbia or wherever, and they're not going to be in network. They're not going to accept your plan. So you're stuck. You're stuck with whoever you have locally. Now, if you're in a good plan, like we are in North Carolina, Duke is in network with one of the Medicare Advantage plans. Well, Duke may not be the best at everything, but they're pretty good across the board. So, I could see where that would be an acceptable source, or acceptable choice. But, generally speaking, you don't think that you want to go see a top specialist until you're confronted with this problem. And then all of a sudden, money doesn't matter, but it's going to matter if you have to pay for it out of your own pocket because it's not covered.
All right, so one of the distinctions of the Advantage plan versus regular med sub plans offered by carriers is this issue of in-network and being able to stay with your own doctor.
Well, and doctors don't have to take Medicare. Medicare Advantage. They could be participating with Medicare and be a Medicare physician, but not have to participate with the Medicare Advantage plan.
So that's an elective from the physician's point of view.
And there's some plans where they could see you today, me tomorrow, and not you the next day.
I'm sorry, that is so strange.
Just the way the system's set
Well,
up.
all week we've been talking about MedSup with Sam Corey. If you want to enter this market, remember we're going to have 2 big workshops. You can head out to our red on-demand video button right on our homepage at brokersalliance.com. Well, that's the Buzz on the Biz for today. Get in the zone, the business insurance zone.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.